We are very much want to become a partner and develop a relationship with our clients, help them grow, solve, not sell. So even as business development, you'll never hear me get in front of anybody and try to push a product. Simply want to learn about their business and how we can provide value and help them grow. So one of the things, and I think this has really benefited us a lot, but 90% of our clients do everything online. We have a great app, website. Our clients are able to take advantage of this, which means clients of our bank, even with everything that's occurred over the last couple of weeks, have still been able to conduct their business, and this bank is thriving. Any questions before I jump into the Paycheck Protection Program?
I don't think so. Go for it.
Okay, so I know that you all are all aware, CARES Act was approved by Congress last week. The House approved it on Friday. The President signed it, I think, just a matter of a couple of hours later. As soon as that was signed, basically the Small Business Administration, the Treasury Department, every impacted federal agency basically had to figure out how are we going to implement this. And in all honesty, they're still trying to figure out how they're going to implement this. Things tend to change on the daily, if not on the hour. But we feel like we've got a pretty good compass in terms of what's being required with this. With regards to the Paycheck Protection Program, I'm just going to say PPP from now on. And we have been proactively sending this out, taking calls and emails in from people that are clients and non-clients, and that's something that's different for us about us compared to other financial institutions. Is there a lot of financial institutions out there that if you are not a client of theirs, they are not even spending time visiting with you on this. We, on the other hand, we are all about business, and we, that's an opportunity to build a relationship with somebody as well as help people that need it. And that's probably been the most rewarding part of this over the last week. Paycheck Protection Program. So it's 100% guaranteed by the SBA. Who is eligible to participate? Small businesses, sole proprietors, independent contractors, self-employed, nonprofit organizations, veteran-owned organizations, and even tribal concerned businesses. So the big key really has been the employee count, 500 or fewer employees is what this program is designed for. That includes full-time, part-time, or other seasonal employees, if you will. The maximum amount of the loan, so the formula for this, and this is included on the application. And Shannon, did you get a chance to send that out to the group? The information that I forwarded to you?
No, I have not yet. So I'll send kind of everything in one big swoop, because I'll have probably some other questions I need to run traps on after this.
Okay, excellent. And all of my contact information will hopefully be there.
Absolutely.
But the application states that to determine the loan calculation, you take your average monthly payroll and you multiply that times 2.5. And that's it. That's the loan calculation. Average monthly payroll times 2.5. That 2.5 multiplier basically takes into account rent, utilities, mortgage interest payments. So that's where all of that factors in, because those are considered forgivable expenses. And I'll talk about that in just a moment. What the Bank of San Antonio has been asking our clients to do, as well as non-clients, is complete the application. We have included a loan calculator spreadsheet on there that we have asked them to complete as well. And then the only backup documentation that we have requested has been your IRS Form 941s for 2019. So we're looking for all 4 quarters of 2019, including a supplement that basically lists each employee individually. So any questions with regards to that? Okay, and
what was that form?
The IRS Form 941. That's your quarterly payroll.
So like if somebody, let's just camp on the what payroll information to pull. Because I think, I know even for me, like I've seen, pull 4/1 to 3/31 because it's the 12-month before the loan. But then I've seen that everyone's kind of defaulting to just all year 2019. What are you all recommending? What data should we pull? Kind of how are you advising your clients there?
Okay, so what we are requesting is 2019. Now, obviously, there's people that may not have had a business open that long. There's been instruction. Let's say you open your business in December. Okay, then we're asking for December through March information. What we're asking that you provide is some sort of information that provides that payroll figure as well as tax information as well. We're trying to be flexible here. There hasn't been a hard line issued. We know that people need this, and I think the government knows that people need this. We're trying to make this as streamlined and as easy as possible. For any of you that have gone through an application process with the SBA to get like a 7A loan, this is so much more streamlined. I mean, application, spreadsheet, 941s. We know a lot of clients are with PEOs. If you're with a PEO, your PEOs or your payroll providers should be prepared to be able to provide to you that payroll information that we need in order to process this.
So I just want to make sure, because some of the questions are kind of irrelevant to this. One thing is with regard what you can include. So my understanding, how we've been advising our clients, is to break out your total payroll costs, but to sort of break it out by categories. So you'll have by month your employee wages, employer portion of tax, employer portion of health insurance, and any other benefits, including retirement. So it's that full employee cost. And then one question I had that I thought was a good question is like, what about your payroll fees, for your payroll filings? I think that would probably be excluded. I don't know if you have a hunch about that.
Yeah, this is what's listed. This is what's listed. Payroll cost equal, number one, salary, wages, commissions, or similar compensation. I think I got a question from somebody about bonus. Number two, payment of cash tips or equivalent. Number three, payment for vacation, parental, family, medical, or sick leave. Number four, allowance for dismissal or separation. Number five, payment for health care benefits. Number six, payment for retirement benefits. And number seven, payment of payroll taxes. And the information that I'm sharing with you was provided to me by the Texas Bankers Association.
So you would take your annual payroll for 2019, for example, and you're going to take that, including all your benefit costs for your employees, employer portion only, so not the employee side, and then employer costs for dental, vision, life insurance, medical insurance, any kind of benefits. So
correct.
Costs plus benefits, and then you're basically taking that total annual cost and divide it by 12 to come up with an average monthly cost, and then you'll multiply it by 2.5. And we're telling everyone kind of break it out in those categories so that you can pull your 941 filings to just kind of give the bank a packet to say, look, the 941 ties to this quarter and all my 941s tie to like my total annual payroll, just so there's kind of a high level that all the data reconciles. Like your 940 annual form should tie to like your 12-month payroll. I haven't heard of them requesting any additional information for how to support like your healthcare costs and your insurance costs. Aaron, do you have any feedback about that? Because I don't know how much support we really need to give here, or if kind of a data dump out of a payroll system is sufficient.
Yeah, and I want to say it's the latter. It's that I'm kind of scouring through these to see if I can pull up a 941 real quick.
I do see a question about, should I include my 941s? For me, if you're running it out of QuickBooks or you have a payroll provider and it's easy, I don't see a reason not to pull it. Just because if you can pull all your filings, the easier it is for your banker to navigate that, the better.
Right.
You know, if you hand somebody an Excel spreadsheet with a bunch of numbers, I just don't feel like that's going to be sufficient. Like I would want that annual report or something that's sort of, or if you've already filed your 2019 taxes, like show them your tax return, the tithes, you know, just something to kind of give some comfort. That's just my thoughts.
Yeah, I'm looking at the 941 right now, just one that somebody forwarded to me. What I'm checking to see is on benefits. And I don't, let's see.
So benefit costs won't be on there, but a lot of people like in their payroll report will kind of break it out for them. But usually your payroll expense will have this big blob that has like employee and employer portion. So that's kind of the piece that I'm thinking people are going to have to do some legwork to kind of split out that employer versus employee, and maybe even get as granular to say, this is how much we paid the health insurance company. Here's a copy of our handbook that explains what percentage we pay, or just something to sort of justify those numbers.
Yeah, the spreadsheet that we've included, and this is something that we've attached. So just to kind of preface all this, other financial institutions may require different pieces of information. This is what the Bank of San Antonio is requesting. So this loan calculator spreadsheet that we put out is something that we've put out. That's not coming from the SBA. This is what we're requesting. So this breaks down salary, wages, and commissions for employees earning less than $100,000. It asks for number of employees earning more than $100,000. And then there's another box for salary, wages, commissions for those employees. And if you earn over 100,000, then you are capped at 100.
So when you're pulling your annual, you know, your 2019 payroll cost, you want to, let's say your cost is, I don't know, $1,050,000, but you had 2 people making 125. Like you have to basically take off any of that payroll that's over that 100,000 threshold. It doesn't qualify.
That is correct. And there even is a box that says excluded wages for employees earning over 100,000. So we'll be looking at that. Yeah. So we want to know the number of employees earning more, their wages combined, and then, you know, confirming how much has been excluded from that total. But there is boxes on here for employer-paid group health insurance premiums and benefits, employer-paid retirement plan contributions, and employer-paid portion of state local taxes for comp. And that's broken. You know, this loan amount calculator is 12 columns for all 12 months.
Okay. And then should if a business has a contractor, oh, sorry, go ahead.
I'm sorry, Shannon. It's Kim Ford.
Yes, ma'am.
Hey, I think we need to talk about what's excluded as well, because the employee portion of Social Security is excluded, and also their withholding, which is really it's really confusing. And the way I understand it is that, you know, like if you have someone that makes, you know, $500,000, and let's say their withholding amount is $100,000. You know, it doesn't limit it limits the wages to 100,000, but then the withholding gets limited pro rata. So we've got to be careful with all those things. And I don't think we can also count the all the payroll taxes that we pay on employees. I think it's just the state taxes in Texas, the TWC.
Yeah, what this document states is state and local, and we've been waiting for clarification or guidance from the SBA with regards to federal withholdings, but we have not received that as of yet. But that's been a pretty common question as well.
Well, I mean, it says that the things that are excludable from what I see are taxes imposed or withheld under chapters 21, 22, and 24 of the IRS code, which is your withholding and Social Security.
Then I'm not sure what document you're looking at. I apologize.
It's okay. But you know, it's just I'm a CPA too, and I've gotten, you know, just like Shannon, I'm sure you have gotten barraged with information.
Yeah.
Yeah. Well, every association and organization out there is coming up with their own, you know, summaries, and But that makes sense as to why, this lists just employer-paid portion of state and local taxes.
And I would split, like if you have your 2019 payroll, I would just make sure you have it broken out by month into like every category, like their gross pay and then the employer portion of like state, local, federal benefits, and just have all of it in a separate column so that you can kind of slice it and present it in every which way. If it changes in the next 2 days, just get it that way. But it's really going to be like your actual costs, not including federal tax amount. And one thing that I want to mention too is there's an employee retention credit. And I think there's been some questions about the tax side of the credit, because if you get the CARES loan, and Kim, feel free to jump in, but if you get this CARES loan, you no longer qualify for the employee retention credit, because in the IRS's mind, you're basically using government funds to pay your employees, so they're not going to turn around then and give you also a credit for keeping those employees, if that makes sense. So that credit you will no longer qualify for, but you will still qualify for the credits related to the expanded FMLA. So don't get the credits for the FMLA confused with the credits for employee retention, because they're two different things.
Can I ask a question? My understanding was only that it was medical premiums, not any other benefits. Is it state somewhere all benefits, group benefits paid by the employer?
What I have seen is group health benefits. Group health insurance premiums benefits. It does not, I have not seen it broken down into medical only versus vision, dental, et cetera.
Shirley, this is Kim. What I read is it's healthcare benefits. So I think you could probably lump, whatever that means, it's because it says healthcare benefits, including insurance premiums. So
I think dental and vision is included. What I'm not sure about is life. I do not think life is included, but I'm honestly not 100% sure about that.
Well, if they're saying, benefits, group life is also a benefit that the employer pays for. I'm just, if they're going to throw it all in there, that's why I was asking.
Yeah, Shirley, I think it's just healthcare.
Okay, thanks, Kim.
But I am seeing that it is retirement funding as well.
Yes.
Correct.
Thank you.
And then there was one question about, does it include the payroll costs, but also commissions and bonuses? And my understanding is commissions and bonuses are still included. So you would pull the 2019 all compensation. And again, if commissions and bonuses take somebody over that 100,000, you would have to back off the over and above. But that's considered part of their pay.
What about per diem?
Per diem?
Payroll costs listed here says salary, wages, commissions, or similar compensation. So I'm not sure. It hasn't gotten very specific, which is left, there's so much that's vague that we're waiting on additional guidance, and I wish I had more clear information for you.
One question I had from someone was about the business start date, and if they changed from a sole proprietor to an LLC or an LLC to an S Corp. And I would use the business formation documents when the business started. If you change to like a sub S or something like that, I would still include the full period. They want your business formation documents, like how long you've been in business.
So Aaron, this is Kim again.
Yes.
And it's also included in the in all the compensation. I've gotten conflicting information about payments to independent contractors. Those are not reported on a Form 941, and a lot of people, pay independent contractors, and that's a big part of their business. What are you hearing on that?
Okay, so that's probably the biggest question that we've been faced with is with regards to independent contractors and 1099s. The instruction that we have received and that we are sharing, or the direction that we've been sharing, is that contractors, 1099s will be able to apply on their own beginning April 10th. So because they're not included in that Form 941, they're not considered an employee, they would actually apply to this program on their own.
Oh,
And they should not be a part of your calculation. And it's caused a lot of heartburn for a lot of people because, you know, there's different types, as you all know, different types of contractors. Even though they all fall under that 1099, there are some that are considered essential personnel and part of the team. And then there are some that are just, you know, they might come in and do just kind of a singular project or something. So to treat them all the same has been difficult for a lot of people. But that's the direction that we've received, and that's probably one of the areas that we're hoping the SBA is going to provide additional guidance on.
Aaron, I have a question, please.
Yes.
I work with a GC, and last year he put all of his employees on lease payroll from a payroll company. We brought them in-house on January 1. Shannon gave me a little bit of information of how to handle that as far as just getting the documents from the payroll company that they were indeed employed but not directly under the company. Is that correct?
Yeah, you're speaking about a PEO?
Correct.
Yeah, we've gotten a lot of questions with regards to that because obviously if you're part of a PEO, kind of that traditional co-employment relationship, the 941 is the PEO's 941 and it's going to take into account all of their employees. So what the PEOs have done is basically prepared reports, payroll reports that will satisfy the needs of what's being requested for these applications.
Okay, so I would just get that obviously from the payroll company, and that would be enough
Correct.
documentation to say, okay, they were kind of like our employees. Okay, that answers my question. Thank you.
You're welcome.
I have a question about, you know, somebody has already laid off employees, except a few. You know, do they still qualify and how they should handle that? And there's a couple components there, but my understanding is it would still qualify. You would still pull your 2019 payroll costs to calculate the amount you qualify for, but then it's really the refundable portion that's affected by the decrease in your payroll costs now. So it would more affect the refundable piece, not whether you qualify to apply or not. But Aaron or, you know, anybody else want to expand on that?
I've got information here with regards to rehires, and let me just look at this before I start reading it out loud.
Because I think if you had a higher payroll cost in prior year, I mean, the fact is a lot of people have had to start laying people off in the last few weeks. Like not everybody could really wait for this. And so, you know, my recommendation would still be to pull your 2019 costs and go ahead and apply for that amount. And then how they're going to be looking at your refundable portion is going to be based on your FTE kind of during this covered period versus your FTE last year. So it's going to limit the amount that's forgiven, but it wouldn't keep you from qualifying to apply. That's my understanding.
That is correct. I mean, you know, just to even simplify it more, what we're going to look at is loan amount that you receive. When we look at this over an 8-week period from the origination date, what we're going to look for is, you know, one, were the expenses and what you received comparable? You know, so what you requested, is that actually what you spent it on? 2, 75%, no less than 75% of that amount should go to payroll. And then the remaining 25% or less would be for rent, utilities, interest on any other mortgage interest, for example, excluding principal. But 75% of that amount needs to go towards employees.
And what if somebody like their payroll costs went way up like in the first quarter of 2020? Is there a way people could go through Q1 of 20 instead, like 4/1 through 3/31, because their payroll cost is higher in that period?
We have received that question, and we have instructed people, yes, provide that first quarter. Obviously, the 941 won't be available, most likely, at least not this week. but to provide whatever backup documentation you can. And we've also just asked, give us a supplement, let us know, give us a summary of what we're looking at. Why did you include just 3 quarters of 2019 and then this first quarter of 2020? Did you hire additional people in January thinking, as we all did, that 2020 was going to be a great year? We're just asking for that documentation and explanation, and we're trying to be, again, just as flexible as possible. And everything I'm sharing with you, again, is just specific to the Bank of San Antonio. Please, this is, I'm not speaking on behalf of all financial institutions, just ours.
And then for
So Aaron, this is Kim again.
Oh, go ahead.
So the other question that I'm getting a lot is some of our clients, the owners are paid with draws and not with, not in salary. Maybe they're an LLC and that kind of thing. And so they get guaranteed payments or there's a draw and not a salary. Do those payments count for this? For the maximum amount of the loan?
Yeah, what we advise is, yes, include yourself, but understand, provide documentation. But I haven't seen anything that has said or spoken to the fact that an owner should exclude themselves.
What if it's run through payroll versus distributions? Because we've run into where maybe for whatever reason, the owner wasn't on payroll, but was sort of pulling money when they could as a distribution. That I think is going to limit their ability to include their kind of comp because it wasn't really payroll. Is that your impression? Because I had that question yesterday and I was like, I don't really, I wouldn't think you could include it because you didn't, I think the IRS is wanting people that were run through payroll and taxes was paid and.
Right. So now you're looking at this gray, salary, wages, commissions, or similar compensation.
Okay.
And again, there's a lot of, this is very vague right now, and it's being made up as we go.
Yeah.
All right, I'm looking at this form and it says self-employed income. So I'm wondering if you can consider this employment and
I'm not understanding the question. I apologize. I can barely hear you.
Okay, I'm sorry. Can you hear me better now?
Yes.
Yes, much better.
Right. On the form that I'm looking at from the bank we received, it says self-employment income not to exceed 100,000. So I'm wondering if that would include the district part of it. Does that make sense?
It does, and I want to say yes, but I don't have a clear answer for you.
And it's probably going to be depending on the bank too and how they handle it.
Right.
Okay. And can I ask one of your questions? We have a restaurant, and we hire, we've obviously done layoffs of most everyone, and they've all filed up for unemployment. And say we rehire them, is there requirements for what kind of work that they have to do? Because obviously we are not in full function, so we can't use all 60 of our employees in the restaurant. Like, can we put them to work?
Not that I have seen.
So they're just going to get a check and not have to do anything?
That I could not answer.
Okay.
Shannon, I have a question if I could, please.
Mm-hmm.
Okay, so we're working with an institution that it's Frost, and they're kind of telling us that they don't have all the SBA guidelines yet as to how the application is going to go. But my question is, can we submit this to the bank as early as tomorrow, and then they'll just have to figure out everything as they get the information from the SBA, or what is the actual date when we can actually submit stuff?
Aaron can jump in too, but the date was was supposed to be tomorrow, and then the gist that I'm hearing is that banks still don't fully have everything they need from the government to actually move forward. And so a lot of them are opening up applications tomorrow, But a lot of them are doing like an online portal process to try to streamline this, and they're trying to do where you have to apply electronically. So I'm not sure specifically what Frost is doing, but I know that a lot of other banks it has to be done through a specific portal, through a specific link. And so what I've been telling everyone is just to pull it all and put it in some shared folder where, the second your bank tells you where to put that information, you can load it quickly. But the tentative date was tomorrow. So I would have it ready by tomorrow.
Okay.
And we are accepting them. We don't have a specific portal. We do have our form and just been sending that out. We have a link on our website, which is thebankofsa.com. We have our business resource center. You can link to that. You'll see there's, I think, a yellow tab on there that says, COVID-19. So we include the link to the application and the spreadsheet there. I've sent it to Shannon. She can email it to you. We're not trying to be, very stringent in terms of how you submit that. We just want to make sure that we're getting a complete packet. And, that might be an advantage for an organization like ours, compared to a larger bank, is that we're able to be a little bit more nimble and trying to figure out how we're going to get this done so that we can get our clients taken care of.
On that note, if you're not a client of the Bank of San Antonio, I guess that's a requirement, right, to be at least a customer of the Bank of San Antonio.
Well, and yes, but let me explain why. What we are sharing with people is that if you're not a client, you would need to open an operating account here. The funds would be deposited into that account, but also your expenses that would be classified as or fall under forgivable expenses. Again, that's the payroll cost, your benefits, your payments of mortgage interest excluding principal, your rent, your utilities. Those need to be processed through that operating account, because after this period, we're going to pull, our records. We're going to pull the amount of the loan. We're going to pull our records, and that's part of what's going to be used to determine loan forgiveness eligibility.
Can I ask a clarifying question?
Please.
Thank you. So right at the beginning, you said you take the salaries, however that is made up, and you multiply it by 2.5 times. And that's to give the 0.5 essence of that coverage for the rent and utilities. Or do we add the rent and utilities in on top of the salaries?
No, average monthly payroll times 2.5. So you're not factoring in your rent or your utilities, any of that. Okay,
just double checking. Thank you.
Yes, no, good question. Let me read some of this to you. This is speaks to loan forgiveness in terms of what kind of documentation we'll be looking for. Number one, documentation verifying the number of full-time employees on payroll and pay rates for the covered period. This must include state and federal payroll tax filings. And this is from the Texas Bankers Association information. 2, documentation including canceled checks, payment receipts, transcripts of accounts, or other documents verifying payments on covered mortgage obligations, payments on covered lease obligations, and covered utility payments. 3, a certification from a representative of the borrower that the documentation is true and correct and the amount for which forgiveness is requested was used to retain employees, make those payments for mortgage interest or rent payments and covered utility payments. And then my favorite one, number 4, any other documentation that's deemed necessary. It's tough to tell that this is being created as we go, huh? And I will tell you our goal as we process these and start distributing these PPP loans, our goal is that the recipient is able to get full forgiveness on these. So we want to work with our clients, not against them. Make sure that they're able to document and hopefully receive full forgiveness on that.
I had a question about eligibility. I had somebody ask about if they have less than 500 employees, is there also a revenue threshold or anything that would keep them from applying, or is it purely based on the number of employees?
You know, I saw something that mentioned certain businesses with over 500 employees. And then I've also seen something that speaks to per physical location. But for the most part, just looking at that one threshold, 500 employees or fewer.
And there was some questions about, you know, if you didn't lay people off, but you stopped paying them. And the calculation on the forgiveness is going to have a couple different components, because they're going to be looking at your full-time equivalent, but also they're going to be looking at your total payroll costs. So they're both a factor. Because there was a question on, you know, if you stopped paying everybody after your business was forced to close, but that forgivable portion is going to have to do with the percentage of your payroll costs and then also your full-time headcount.
Yeah, and again, they're going to be looking that 75% of that is paid towards payroll cost.
And then if the loan is not forgiven, the terms of the loan, rates and terms. Aaron, what have you all, you know, landed on that? I believe it's 4%.
Yeah, maximum interest rate, and that's actually outlined. Maximum interest rate of 4% and a maximum loan term of 10 years.
And then will every bank will have their own application form and process, really. I mean, they'll be similar, but every bank has a different form for the most part, right?
Well, the application that we're utilizing is the one that was issued by the SBA and the Treasury Department. You'll find one on each website, and they're identical. The worksheet, the loan calculation worksheet, is what we have included. And then I think the difference, probably the biggest difference you're going to find, is the documentation that's going to be required by the different financial institutions.
And then I had a follow-up question about confused thinking rent was included. So there's two different things. There's the calculation for what you qualify for on the loan side, which that's related to your payroll costs only. Rent doesn't have anything to do with that, but you are able to, after you get the loan, you can use the loan to cover rent expense. So it's like a qualified expense, like a use of the funds, but it's not part of your calculation for how much you qualify for, if that makes sense.
Well, that's the 2.5 multiplier is what they're utilizing to include everything outside of payroll. And I think they just kind of came up with a blanket formula as opposed to having everybody provide, you know,
it's an 8-week cover period.
Process,
so they're saying, hey,
yeah, it would make this process
weeks.
So much longer. Yeah.
Because, you know, the goal is to have an 8-week period. So if you think they're taking 2.5 months, so they're kind of saying, hey, we're giving you 2 months plus 0.5 of other stuff.
Yeah.
Yeah.
Right.
And then employer portion of Social Security, is it included? What about workman's comp?
I have not seen anything that speaks to workers' comp.
I have not either. And I don't know, Kim, if you've heard anything on workman's comp, please jump in. But no, employer portion of Social Security, I do not believe is included.
Yeah, I haven't seen either of those.
Okay, I have a question. Can you hear me?
Yes.
Yes.
Okay, so this is a little bit confusing because where it says, what can I use this loans for? And it says payroll cost, interest on mortgage, rent, utilities. But the only amount we can apply for is what we actually pay for payroll, for employee payroll on the loan amount. Is that correct?
Correct.
Correct.
Oh.
Average monthly payroll.
You have to remember, this is a payroll, it's like a payroll protection program. So really the intent of this, you know, bill is to like encourage employers to keep hiring people and employ people. So the intent of it really is to mostly cover payroll costs. So they're using this 2.5 payroll formula to basically get to about 2 months worth of pay. And it's like, you can use it for rent, you can use it for interest, but really the calculation is based on your payroll.
Yeah, and that is the whole intent of this.
Okay.
That is the whole intent. Get people back to work, get people paid. Yeah. And that's why, you know, in terms of determining forgiveness eligibility, 75% of what you receive better go, at minimum 75% better go towards employees.
Yeah. And another quick question, number of jobs, and I don't know if you've already answered this, but what is that number of jobs?
It's going to be a full-time equivalent calculation. So You have to calculate FTE, and for part-time people, the IRS threshold for people that are not full-time is 30 hours. So if you have full-time people, they would be FTE, and then let's say you have 2 people that work 30 hours each, that would be considered 2 FTE, or if you have 2 people that work 15 hours each, that would be 1 FTE. But I'm kind of going off the IRS 30 hours a week for part-time for now, but I haven't seen anything else. So that could change. That could change. I haven't seen a FTE calculation, so I'm just going with the IRS definition right now.
Okay, so for number of jobs, I put 12, as I have 12 full-time employees, FTEs. Is that okay?
Yes.
Okay.
And if the owners are on payroll, I would include the owners too.
Yes, ma'am. That is including the owners.
Mm-hmm.
Okay.
One thing that we haven't mentioned, I don't know if any of you have an existing SBA 7A loan, but for a 6-month period, the SBA is actually going to be making those payments for you, payment and interest, and that's not a deferral. They're actually going to pay for 6 months payment and interest on those loans.
One thing we have had people ask, Aaron, is, with the EIDL loan versus this loan, and should they apply for both? Should they apply for one? What advice are you all giving your, clients as far as should they apply for both, and then they can make a decision if they want to roll the EIDL into the CARES, or what do you think?
Great question. Our suggestion has been, there's the EIDL, Economic Injury Disaster Loan. There's also, I think, an emergency bridge loan that is either 10 or 25,000. Both of those you apply directly to the SBA. Okay, so that's one big difference. Those go directly to the SBA, whereas this, you're sending it to us or your financial institution. The basic general advice that we've given is you can receive both, but please do not use the funds for the same thing. You need to keep those expenses separate with paying particular attention to the PPP, and that you are only applying those PPP funds towards those eligible forgivable expenses, and keep those completely separate. So what they are trying to do is avoid anybody double dipping, getting 2 different loans to pay for the same thing.
Are both of those funds forgivable, or is it only the PPP fund that's forgivable?
The only thing that I've seen with regards to forgiveness is the PPP.
Yes, and then there's like a small $10,000 portion for the EIDL that might be, forgiven. It's like there's like a 10,000 initial grant. That piece might be forgiven, but overall the EIDL loan is not a forgivable loan.
Shannon,
Yes, ma'am.
I think the $10,000 is automatically forgiven.
Perfect, thank you.
So then if somebody is only interested, and sorry, Shannon, this is Howie. If somebody is interested in only the forgiven part of that, do we apply for that amount and put in our employee information and apply for the 10 grand and then be done?
I would. I haven't seen any reason not to, because if you qualify for the EIDL and then you just want to say no thanks, that's fine. It doesn't keep you from applying for the $10,000 emergency grant. Kim, what are you advising people?
Yeah, we're telling people if they need money fast, that to go ahead and get the 10,000. And what happens is at the end of the day, what I'm reading is if you get the PPP loan, and then you have part of that is going to be for, let's say your PPP loan was for $100,000, and you'd gotten the $10,000 EIDL grant. And let's say you spend all of the $100,000 on the payroll and rent and the things, and you all qualified so that it could all be forgiven. It would be all forgiven except for the $10,000. So you can't get to the $10,000 EIDL grant and then have all of your PPP loan forgiven as well.
Correct. Good point.
So is the application for the grant separate, or is that something that's going to be done automatically?
It's there's a link for it, and I can send it out after this call to everybody. But it's a link, and the form takes like 10 minutes to fill out. It's a very short, quick form, like name, address of the owners, information of the owners. You answer some questions like you don't have a felony and you don't owe back taxes, and then how many employees you have and your prior year revenue. And that's kind of the main things, and cost of goods sold. It's very basic. And so I can send that link out after this call.
Shannon, there's also backup information though requested on the back of the EIDL form that requests some information over the last 3 years and that kind of thing. So that has to go as well.
Well, and I wonder if that was on the nonprofit form, because we had walked through one of the business forms and it was extremely short. But I wonder if you're checking that nonprofit box, if the form is longer, because I haven't filled out one for a nonprofit.
It's possible. I mean, yeah, if you check that box or something else happen, the back of it though, where it says, you know, the criteria for each piece, it's in a non-profit piece that's got these extra documents. So maybe you're right. So again, just to clarify then, so if we are a non-profit, you know, if Chosen got a grant for say 100,000 then for PPP, we also apply for EIDL and EIDL give us 10,000. We have to offset that against the PPP loan, even if we spend it in a different way. So we'd only get forgiven 90,000 of PPP because we got the 10.
That's my understanding, is that you can't have the forgiven under both parts. So you would have, out of the PPP, you would have 90 of it forgiven, because they're not going to approve like the full 100 and also forgive that part. So they essentially basically take that 10,000 grant and apply it towards a portion of your PPP, kind of like we already forgave 10,000 of that. So we're not going to forgive that 10,000 again.
Even if that 10,000 is being spent on something entirely different than salaries.
Correct.
Yeah, that's my understanding.
Good to know. Thank you. I had no idea that was the case. Thank you very much.
Yeah, I didn't realize that either, because I filled mine out yesterday for 3 of our companies, and it just specifies that it's strictly a grant. It doesn't talk about it intertwining with the loans. And it said you can get the money within 3 days.
It's supposed to deposit quickly. I haven't had any business owners say that they've received the funds yet, but also everyone was kind of applying this week. And one thing is I do believe you can submit a separate application for each company that has an EIN. So it's following that EIN number. There are some affiliate entity rules, like if it's owned by another entity, you'd want to apply for it under the parent entity. But if you own more than one business, you know, I would apply for it under each business that operates separately. But then all of your reporting requirements and everything is going to be, you know, at each individual company level. The affiliate entity, really, once you get into the 500 employee piece, how to define that, whether you need to combine your entities, is a little hairy. So if anyone has follow-up questions on that, I can, you know, work through that separately.
And I'm looking at Ron's question about the time frame. We can expect the loan proceeds once we complete the package and get it to the bank. And then to add on to that, when does the time period start that we have to start rehiring? So are we going to have, basically, are we going to have our money we can hire in time?
How long? So the first question is, how long, once everything's sort of submitted, do banks think they're going to actually fund this? And then the period that they're going to be measuring the payroll costs and FTE over, is that the 2 questions?
Yes.
Okay. Sorry, it's just a little, there's a little bit of echo. Aaron, can you elaborate on that?
Yes. With regards to the timing question, I don't know. The holdup, I can tell you, right now is going to be with the SBA, because we need to get a number generated, E-Trans number generated from the SBA. And this is how the SBA is going to keep track. And you can imagine, in, you know, all over the country, they're going to need to keep track of every one of these dollar amounts, because that $349 billion that's been set aside is going to go quickly. You know, I've heard, you know, 2, 3, 4 weeks. The speed in which we can get that number generated by the SBA is really going to have an impact on this. You know, this is priority 1 for us. But I don't have a firm time frame. I can't tell you, 2 weeks after submittal, 1 week, 10 days, 2 days. We just don't know as of this point. Hoping to have a little bit more clarity on that, but there's nothing that I can tell you, can commit to as of right now. What I have seen with regards to the rehires, the time period exemption for rehires circumstances, February 15th through April 26th.
Mm-hmm.
And I don't know if that answers your question.
So that's the window where they'll be looking at your payroll costs and your FTE number?
That was for bringing back employees that you may have furloughed or let go.
Perfect. And then the FTE calculation, there's actually 2 periods you can pick from when they're going to be comparing like your FTE. And so there's a couple different options that it's at the borrower's discretion. So they're essentially going to be saying, okay, what's your FTE, average FTE during this period as comparison to a prior period?
Yeah, we're asking for your payroll information for 2019, but we're also going to ask number of employees at the start of this process, and then the number of employees at the end of this process, because we want to make sure that nobody takes this money and then let's go without their workforce. I mean, the whole purpose of this PPP, Paycheck Protection Program, is to get people back to work and get them paid.
So if you have multiple entities with different EINs, do you apply for a separate PPP for each entity? Is that what you would recommend?
Yeah, what we've been advising is if you have a separate tax ID or FEIN, that that's if you're getting basically 2 sets of 941s or multiple sets, whatever, that it's an application per.
Aaron, we got some information today that said that small businesses and sole proprietorships can apply on April the 3rd. And then it says that independent contractors and self-employed individuals apply on April 10th. What's the difference between a sole proprietorship and a self-employed individual?
I cannot answer that question for you.
It's a great question.
Yeah, it's a really good question.
So try to apply on the 3rd.
Yeah, exactly.
Make them tell you no.
I think that's a very good strategy. I actually spoke to somebody from the local SBA district office this morning, and they were she felt so helpless. It was like, we're waiting for direction. Like, I really can't tell you anything beyond what you already know. So today's Thursday. She said she was hoping to get this before Friday by end of day, but I have not seen anything as of yet.
I have a question. Somebody mentioned that they merged 2 companies this year. So when they're pulling it, should they just consolidate? And I would say just to submit the application for that new combined entity, but then when you're pulling your payroll, just pull the historical for both so you can combine it in your calculation.
Yeah, and if you're sending the packet to us, just include a little summary or something, a little explanation. Again, a lot of these are going to be very unique. We understand, for instance, if you're, this 941s don't exactly equal the spreadsheet. We're trying to be, again, flexible and as understanding as possible as we figure this out.
So just to close, because I know everyone has probably additional follow-up questions, I will send out Aaron's contact information to everyone on the distribution list. If you haven't been getting my emails and you want to put your email in the comments, I will add it to the distribution list. And then Aaron, I guess just to close, if you could summarize, like, from a documentation perspective, everyone that's trying to pull their documents together today to be ready tomorrow, like, what exactly should they pull from, like, do they need to still pull a personal financial statement, prior year's tax returns, that kind of thing? Can you just sort of give a high level, what would be a good starting point for people?
In terms of applying for the PPP?
Yeah, just kind of everything they should sort of gather and have ready to go.
Completed application. For us, this, again, I'm speaking on behalf of the Make Senate Radio. Completed application, our loan calculator spreadsheet, and your 2019 941s. We're not asking for anything else. This loan is being made strictly with regards to payroll, and that's why the calculation is your average monthly payroll times 2.5. So we're not looking at credit, we're not looking at your tax return, we're not looking at any of that. We're trying to make this as simple as possible, and hopefully it's information that your clients or you will have readily available.
That's great.
Or can get it within a phone call, calling your payroll provider or something.
Mm-hmm. That's great to know. And I guess because there's no personal guarantee component, all the additional information usually required for a loan is sort of unimportant, sounds like.
Yeah, I mean, these are 100% backed by the SBA. So there's no recourse, no personal guarantees. None of that is being requested. And it's interesting because you have, at least within our organization, we have, very experienced bankers have been doing this for, 20 plus years. And this is just, it's so unique. This really hasn't occurred. This is brand new for everybody. It's like, what do you mean we don't need these? What do you mean we don't need, copies of the minutes for the incorporation, or we don't need, 3 years of tax returns, so we are adapting and learning as we go.
Yeah, absolutely. Well, we really appreciate your time. And I know you talked about this at the beginning, but I want to just reiterate, because most banks, a lot of the big banks right now, they will only be doing these for existing clients. So if your current bank is either unresponsive or not able to help with this, it might be challenging if you don't have an existing bank to work with. And, Aaron and his team are open to new clients at this point. They're one of the few banks that are willing to speak and meet with new clients. So feel free to reach out to him. I'll send out his contact information if you don't have a bank that you're currently working with and you need to make a move. So thank you, Aaron, for your time. We really appreciate it. If anyone wants to add, I'll leave the meeting open for a little bit longer. So if you want to add additional questions, I'll do my best to research them and send as many answers as I can. And then also, if you want to get additional information, if we continue to send emails out, put your email on the bottom, and we'll just, as I get information, I'm sending it. It's changing on a daily basis, and I certainly don't have my arms fully around everything that's going on. So appreciate, Kim, you collaborating on this call as well. It was just awesome. And Aaron, thank you again for your time. My pleasure, and I apologize for the hour-long tap dance here. We're doing our best, but it was a pleasure visiting with everybody.
Thank you.
Awesome. Thank you, everyone.
Thank you.
Thank you.
Bye-bye.
Thank you very much. And Shannon, on a separate thing, I'll text you, call me when you're done. I want to ask you something about QuickBooks. Thanks.
Yes, sir.